this morning's Money Watch, affordable mortgages. It is the silver lining in the economic cloud. Historically low mortgage interest rates. Our financial advisor, Ray Martin, is here with tips on how you can take advantage of them right now. If you're thinking of buying or refining, it's very interesting. We keep you listen to the economic news and they talk about interest rates, and sometimes it doesn't really apply that much to us. But in this case, these mortgage rates are phenomenally low. Yeah, mortgage rates have hit historic lows. We already had a slow economy. Interest rates were already low. But when the debt crisis in Europe emerged, investors sold off riskier investments, flocked into treasuries, pushing interest rates down. Mortgage interest rates now are in the high to mid 4% range, the lowest we've seen since 1956. That's the silver lining to some of these economic crises around the world. Right. So if you are employed and if you are starting to look, you've built up a little equity, and it may really be time to buy. Talk a little bit about how you can save long-term on interest. What does this really mean? Okay, well, there's a new twist for mortgage advice for home buyers and for homeowners. Here I'm saying 20 is the new 30 when it comes to mortgages. Home buyers should think about a 20-year mortgage. Why? The interest savings can be significant here. First of all, on a 20-year mortgage, you're going to get an interest rate about 1/4 percentage point lower, because banks would rather only own a mortgage for 20 years at these low rates versus 30. Okay. And if you borrow $200,000 on a 20-year mortgage versus a 30-year mortgage, you'll save over $70,000 in interest costs on a 20 versus a 30. For home buyers, it's a great idea. And if you can get that nut in your mind about how to make that, you're going to be saving yourself a significant amount of money. And at these low interest rates, the monthly payment on a 20-year mortgage is just incrementally larger, just a little bit larger than a 30-year. Yeah. It's affordable. There are other ideas, though, too, about ways you can help save money using these mortgages. Yeah, for home buyers, a 20-year mortgage, which is paid off 10 years earlier than a 30-year mortgage, makes a lot of sense. Think about a young home buyer buying their first home and then planning to have children. Their mortgage will be paid off in 20 years, just about the time their kids are ready to go to college. So they'll be mortgage payment free and have extra cash flow to help for tuition bills, setting themselves up for a really secure situation in the future. Now, what about sort of currently, though, now? Is there a way to save money by making extra yearly payments? Well, if you want the more affordable payment on a 30-year mortgage versus a 20-year mortgage, on that $200,000 example, the payment's about $200 less on a 30-year. Go with a 30-year mortgage for a home buyer, but then make 2 extra mortgage payments a year, and you'll have it paid off in about 21 years, giving you essentially the same savings as you would on a 30-year mortgage. Go to calculators on websites like bankrate.com and calculate how making an extra payment can help you. Just make sure if you send in extra payments, tell your mortgage servicer in writing to apply the extra payment to your principal. Can you get penalized for that? Well, they might apply it just to a future payment instead of knocking down your balance. The key is you want to pay down your balance with that extra payment. All right. Now, what is a cash-in refi? What is that? Okay. For refinancing, this is for people who already own homes. People are doing what's called a cash-in refi. Remember the days when real estate values were going up, people were replacing a smaller mortgage with a larger mortgage and taking cash out in the process? Sure. Well, now what's happening is 1 in 5 people refinancing right now are shrinking their mortgage. They're replacing a larger mortgage with a smaller mortgage and bringing cash to the table to pay it down, called a cash-in refi. Wow. 1 in 5 folks did that last quarter, the 3rd highest level since these levels were tracked. And the advantages here, Harry, are you get a smaller mortgage, a more affordable payment, a lower interest rate, and you save on extras like primary mortgage insurance or private mortgage insurance because you have a smaller loan. And so even we talked about new mortgages at the beginning. So if you're refining, should you also do the same thing with getting fewer years? Absolutely, I think so. If you have a 30-year mortgage, you've paid off for 7 years, you have 23 years to go, don't replace it with a 30-year mortgage. Instead, replace it with a 20-year mortgage, because then more of your payments will go to paying down principal, and you'll be better off in process. We're sitting there looking at historic lows. Should people sit and say they could go even lower still? Okay, mortgage interest rates are probably the lowest we're going to see in a lifetime, the lowest since 1956. How can you beat that? Lock in now. There you go. Ray Martin, as always, thank you so much. Good job.